It's the Tuesday Gold Report, and our next guest says deflation is the trend right now, but is it coming to an end, and what can it mean for the metals? Mike McGlone of ETF Securities joins us now in studio. Mike, thanks so much for being with us.
Thanks for having me.
Now, before we talk deflation in the metals, I need to ask you about Greece. The country defaulted on its IMF debt payment today. Does anyone really know what's happening there?
Well, apparently a lot of us don't, because most professionals, a lot of people are saying they didn't default, it's arrears. And I think, like a lot of your previous guests said, is both parties know default's the worst case. Both parties know Grexit's not is a worst case. So they'll come together. I think the market's pricing that in. One thing that's really happened is when this news came out Monday that they hadn't agreed,
right,
one of the best performers was the U.S. Treasury bond market, not gold. So that was a little disappointing.
All right, Mike, so let's look at deflation in the markets right now. Is deflation the trend? And if I pull up a chart right now, it shows silver and other market trend lines since 2013. Could this trend be poised for a reversal, and what could this do to the metals?
Well, we sure hope so, but we have to really acknowledge the facts. And the facts is the trend in these markets, what are the markets telling us, is down, deflationary. Now, we've had a spike up recently in crude oil. We have a pickup in bond yields. Silver's come up a little bit. It's been unchanged, but now it's unchanged. But overall, the trend's down, and one of the things to indicate that is look what the People's Bank of China just did. They just cut rates for the third time this year. They're not doing that because they want to. They're doing it because they have to. Deflationary trends, they need to stimulate growth. And virtually central banks never cut rates because they want to. So that trend is in place. We hope it ends. I don't know what it's going to take, but for now, I think prudent investors should focus on that trend being in place and not trying to pick a bottom.
So the chart also highlights oil's slump since last year. It has really been stuck around the $60 barrel mark for the past 2 months now. What implications could a break from this range have on gold?
Well, oil is, I would call it the coiled-up spring scenario. It's just been stuck on 60. And, when you're in the trading pits and stuff, you say, it's going to move. It's ready to move. It's going to go either way. It might do a head fake, but the path of least resistance is down. And what I like to say there is that's the trend. Supply-demand trends are down. Who knows what's going to happen geopolitically or with Iran. But if and or when it moves down, this whole premise from the Fed that deflation lately was a transitory factor would go away, which could be good for gold. And one thing that's key point about this chart, if you look over in the left-hand axis, 100 is where I started, where most of these markets started at the end of 2013. That coincides with 3% in the 10-year note. And that's significant because that's where the 10-year note started at the beginning of 2014 and in 2013. But it's also, if the market can sustain above 3%, that would be indicating that the Fed would finally see inflation above its target. Why? Because the real rate's really usually averaging around 1%. And we need to get there, and the market's not doing it. It's percolating a little bit. It just needs to sustain above that for the Fed to really say, oh, we're seeing inflation.
Finally, Mike, it's the last day of June. Hasn't been a great month for gold, but is it a good time for investors to be getting in right now?
Well, I think, we have to rule is never pick bottoms, but absolutely, in a longer-term standpoint, you want to be reallocating to a primary alternative asset like the precious metals when they're completely out of favor. And June, the first quarter, second quarter, the first half of the year is definitely not a favor month. Markets are generally down. Platinum and palladium leading the way with the deflationary trends. ETF flows are negative. It's very, people just are not attractive to the asset class. So it's getting very attractive versus the other primary asset classes like equities are getting a little rich. So reallocating and being a prudent investor at levels I think is important and prudent. It's just trying to pick bottoms. We don't want to do that.
Right. Well, we'll see what July has in store. Mike, thanks so much for being with us.
Thanks for having me.
And thank you for watching. We'll see you on Thursday for our next Gold Report.